Good morning. So I was working on a homeowner's policy for a client. They came over to me through a mortgage lender, and the thought occurred to me that it might be a good idea if I give some tips to those of you who are trying to help your clients obtain a homeowner's insurance quote, whether it be for a refinance home or whether it be a first-time home buyer. So on the insurance end, some of the things that we have to have, no matter what, it's on the application, are a few things such as the buyer's name, their date of birth, their current address. If it's a refi, then it's obviously going to be the address that we're working on. If they are a first-time home buyer, it's going to be where they've been renting. The insurance application does ask for prior history of where they live. So we need to know what their address is going to be. We're going to need to know their date of birth as well as their occupation. The reason we're going to need to know their occupation is because one of the things that's asked on the application is there a home-based business? Not only that, but there are discounts that can be had for certain types of occupations. One of the other things that we are asked on the application, and this is a big one, and we're going to have to ask that client. So if you ask that client before you send us the information, that's helpful. If not, we'll have to reach out to that client and circumvent, come back around and get that question answered. But it's, are there dogs? And if there are dogs, they want to know the breed. If it's a mixed breed, you put mixed breed. If it's a pit bull, well, we got to know that because certain insurance companies don't take them and certain insurance companies are okay. They just exclude coverage. And then some will sell the actual animal liability coverage. So it is an application question. We do need to know that. One of the other things that we are asked is, are there any updates? Now, this is the big one. This is the big one. This is the one that can help us as insurance agents turn around the quote faster so we can get it to you quicker. But it's also one that it determines rates, and we can get stumped on this question. And is, are there updates to? There's 5 major ones: heating, roofing, plumbing, wiring, and cooling. Those 5 things we need to know. And most quote systems that we use in insurance are set up to automatically seek out public records for permits. Sometimes there are no permits and these things are done, and that's okay. We don't need proof. We just need to know what year they were done. So if you take an older home, let's say you're working on a home that's built in the 1940s, and the system cannot find any permits for any updates. As far as the system knows, the roof is the original roof from the 1940s, so is the plumbing, the wiring, the heating, the cooling, whole 9 yards. So if it assumes that there's never been any updates done to this home, you're going to get surcharged. There's going to be a higher rate and or an additional fee for the age of those things. The other thing is we need to know, are you using a wall heater that's like one of those old school wall heaters where you just turn it on and it's got a pilot light at the bottom and it gets hot? Or is it thermatically controlled? If it's got a thermostat where you can change the temperature and it goes on and off and, you know, does like a modern thermostat would, then that's going to look more favorable than, say, old school wall heaters. Old school wall heaters, just know that policy premium is going to be through the roof. So I get asked quite a bit, it's an old home. Why does it cost so much to insure? Well, it costs more to insure because the building materials that were used prior, I mean, let's face it, you look at things that are built today, they're not as good quality as they were back then. So let's say a fence was built with redwood. Go to Lowe's, I dare you. Go to Lowe's, go to Home Depot, go price out redwood. Look at the price of that. So the insurance contract is set up to replace like with like. If those materials are no longer available, they have to replace it with the same quality. So if back in the day they used a high quality material, but today it's phased out, well, now they have to find a comparable high quality material, which makes it more expensive. So older homes, not always cheaper to insure. In fact, many times they're more costly to insure because a newer home's built with newer materials, less likely to experience a claim. An old home, it's going to break down, it's going to have things go wrong, and 9 times out of 10, The client's going to have a claim at some point, and then they're going to wonder, well, why is this not covered? Well, because it's wear and tear. Wear and tear and age are not covered under insurance for the most part. I mean, there are some caveats, and that can be worked out. But for the most part, your standard homeowner's policy is not going to cover your roof if your roof is 50 years old and never been replaced and or maintained. So for those that are lenders and realtors who are trying to help your clients find, competitive rates on their premium, just know that we need that information, and the faster and more information you can get to us, the better chances we are at getting that quote turned around quickly, and the better chances we are at finding a lower rate. So now you know. Good talking to you. If you have any questions, feel free to reach out to me. I'm always willing to answer those questions. Have a great day, everybody.